back to my YouTube channel. For those who are new here, hi, my name's Ava and I'm a mortgage paraplanner. In this video, I want to explain what equity release is, as what I found recently is a lot of people actually mistake equity release for a further advance. So I just want to clarify a few things as to what it is, who's actually eligible for it as well, because not everybody is. So without further ado, let's just jump right in. The things I want to cover off in this video are what is equity release, who qualifies for it and what are the key requirements, how does it actually work and what are the benefits and drawbacks of using equity release. So let's start with explaining what equity release actually means. So equity release is a way of unlocking value in your property and turning it into a cash lump sum. You can either take the money in one lump sum or several smaller lump sums. So there are actually two main ways in which you can release equity in your property, and those two ways are by using a lifetime mortgage or a home reversion plan. Now, for the purpose of this video, I will only primarily concentrate on the lifetime mortgage side of things, but I will just quickly run through what a home reversion plan is as well, just so you've got an idea of how the two differ. So a home reversion plan is where you sell off a portion of your property to a home reversion provider at below market value. So for example, you can sell off 40% of your property at below market value. So if your house is valued at, let's say, £100,000, you won't receive £40,000. You'll probably receive about 15 to 20,000, or even less sometimes. Also, for a home reversion plan, you must be over the age of 65, compared to a lifetime mortgage where you can obtain one from the age of 55. If you choose to then buy back the shares, you will have to do so at market value, so it is a very costly way of obtaining a cash lump sum. So how does that differ to a lifetime mortgage? As I previously mentioned, with a lifetime mortgage you can obtain one from the age of 55, and with a lifetime mortgage you don't actually have to sell off a part of your property to a different provider. I'll explain how a lifetime mortgage actually works further in the video. So what are the key requirements to qualify for a lifetime mortgage? So first of all, you must be at least 55 or over. You must have sufficient equity in the property to be able to actually release some money. So 9 times out of 10 probably will have a property that doesn't have an outstanding mortgage on it and you actually own the property outright. However, you can still obtain one if you do have a current mortgage on it, but we won't go into that in this video. The main requirement is that you actually live in the property, so you must live in the property that you're looking to get a lifetime mortgage on. And there are also various aspects when it comes to the type of property. So certain properties are actually excluded and you won't be able to get a lifetime mortgage on those. But this can be discussed with a suitable equity release advisor who'll be able to advise you as to what is and what isn't accepted, as different lenders have different lending criteria. So how does a lifetime mortgage actually work? So with a lifetime mortgage, what you are doing is in effect borrowing a percentage of your home's value at either a fixed or a capped rate. So unlike a normal residential mortgage, you don't actually make any repayments on this type of mortgage. Instead, what happens is the interest on the mortgage rolls up, which means it is added onto the balance of the mortgage. In normal circumstances, a lifetime mortgage is normally paid off either on death or when you go into long-term care. Now, let me be honest, lifetime mortgages have had a really bad name for years and years now, as they've been seen to be a very costly way to raise money. Also, due to the lack of protection in previous years, a lot of people found themselves in negative equity, meaning that the amount that they had to repay to the bank, or that the family had to repay to the bank, actually ended up being more than what the house was sold for, meaning the family then had to use either the inheritance or extra funding to pay off the outstanding balance. Now, just to explain as well, so the way a lifetime mortgage is actually repaid is upon death, or if you move into long-term care, the bank basically ends up selling your property and paying off the outstanding mortgage. Now, obviously, if there's a value remaining in the property, your estate will receive that money, but if the house sells for less than what the outstanding balance of the mortgage is, you don't have to worry, as there is no negative equity protection in place with majority of products nowadays. Things have changed dramatically in the recent years when it comes to lifetime mortgages. Having personally spoken with lifetime mortgage providers, there are now many ways in which you as a consumer are protected. Some of the protection includes downsizing. So if you decide that actually you want to downsize on the property, providing that the lender is happy with the new property, if there is a discrepancy in terms of your outstanding balance on the current house to that of the smaller house, you can repay the extra with no early repayment charges. I've also mentioned the no negative equity protection, which is probably the biggest one. Just gives people that peace of mind that should the worst happen, their family won't have to pay the outstanding balance. You can now also make partial repayments to a lifetime mortgage, which never really used to be the case. This means that if you do choose to borrow money using a lifetime mortgage, you can actually aim to repay that before you either die or before you move into long-term care. So what are the main advantages of using a lifetime mortgage? So the first advantage of using a lifetime mortgage is that you actually don't have to make any monthly repayments, unless of course the bigger plan is to repay the mortgage rather than having the bank sell your home to repay it. Also, the interest rates on lifetime mortgages are at an all-time low. Probably never been this low, as normally what you'd expect with a lifetime mortgage is that interest rates are much higher than a residential mortgage, whereas right now, as I say, having spoken to providers, the interest rates are pretty much the same, and they're actually fixed for the whole duration of the loan, so you don't have to worry about having to review your interest rates at any point. Don't have to worry about the interest rates rising in the future. Using a lifetime mortgage is also quite an easy way of raising capital by using your property. You're needing a lump sum of cash for either major repairs to the house, or you want to gift your children some money to help them buy their own property. It's now considered a safe way of raising a lump sum of cash, just because how regulated it is now and the amount of protection the lenders actually offer. Now, just to add to that, as I mentioned before, I would always consult an experienced equity release advisor, as they'll be able to tell you whether that is the right way for you to go about things. As what your plans may be, there could be other cheaper ways of raising finance. So with that, what are the actual drawbacks of using a lifetime mortgage? Well, for one, it could prove a really expensive way to raise additional cash. Just as I say, because the interest rolls up, so the balance that you're actually left with at the end of it could be significant. This in turn then means a lower inheritance for your family. So if your plan is to actually leave quite a big inheritance for your family, you need to be mindful of that, as unless you start repaying the mortgage while you're still alive, the likelihood is that the bank will sell the property to redeem their borrowing, and then there'll not be much left for the family. Another drawback is that a lifetime mortgage is not actually available on every single property. There are certain lenders that will consider a bigger range of properties. However, majority of them have quite strict criteria on what they will and won't accept. So I mentioned at the start of the video about how people confuse equity release with having a further advance on the current mortgage. So as I mentioned, the main point of using a lifetime mortgage is the fact that you have to be either 55 or over in order to be able to qualify for one. Another thing is the fact that majority of lenders won't lend beyond 50% of the home's value, just because obviously that will increase as the interest rolls up. Whereas when you get a further advance, a lot of lenders will probably consider up to 85%, and they'll just do it as an additional residential mortgage. But I'll cover that off in a separate video. So you may be thinking, why would I get a lifetime mortgage over using my pension, for example? Because if you're not already aware, when you turn 55, you are actually able to access your private pension, where you can take a 25% lump sum, absolutely completely tax-free. Now, the reason you might want to consider using a lifetime mortgage instead of accessing your pension is that your pension may be invested in a way that at this moment in time is just not viable for you to access that money. So it just gives you an additional way of raising finance without having to disinvest. This is why speaking to especially a financial advisor about your pension and what your plans are will help you establish what the best course of action is to take in order to achieve your goals and your financial plans. Now, I personally work alongside an experienced equity release advisor, so if you or someone you know is considering a lifetime mortgage, please use my contact details below to get in touch, and I'll be able to put you straight in touch with the equity release advisor, be able to advise you further as to whether that is the right thing for you to do. My contact details are just in the description box down below. So guys, this is it for this video. I'll be honest, equity release is probably one of the hardest things to actually properly explain. I hope I've managed to clear up what equity release actually means and how it differs to a further advance, which, as I say, I'll cover off in a separate video. If you like this video, please give it a like and also subscribe to my channel down below. I really appreciate the support I've been given so far, and obviously every subscription, every like and every comment does matter. If you've got any further questions, please pop them in the comment section down below and I'll be more than happy to answer those, or drop me an email, and once again I'll respond as soon as I can. And that's a wrap. So I'll see you guys on Monday with another video. Bye guys.